Perfect. All right. So I guess how was your year, P?
Oh yeah, it was really good. If you look at kind of my whole history, I started off just basically chasing penny stock momentum on Twitter before I really knew anything, and and then I got into options and um, found pretty quickly that my initially what I was best at were these a lot of times mid caps in basic materials and energy. These just plays where there wasn't a lot of noise, and I really kind of learned in those and applied that. Eventually, got into more large caps, but I started the year off pretty heavy in energy. Caught a nice run on Oxy, of course. Got into some mid caps there, and just really worked on refining execution, sizing, all that kind of thing. When to play weeklies, when not to, and a lot of that's learning by doing. I mean, there were a lot of setups where I would be right about the direction, but if you're not if you're not getting the right contracts and the right times, some of the Greeks kind of start to work against you. And people always say with options, learn the Greeks. Well, kind of honestly, the best way to learn it, um, I'm not saying the best way is to lose money, but the best way is to see how they actually impact a contract, whether you're in it or just watching it or whatever. So I learned a lot about that. I developed a different perspective um, on earnings and much less of a kind of lottery perspective, even though I did well on some earnings plays like Roblox and a couple others, but just really learning to just watch those, read the report, play it after the fact, just so much more reliable. So yeah, so I learned a lot. I continue to work in flow. Really kind of proud of myself on TA, how I started to develop some levels. It works so well with option flow, like we've seen in here. So all of that was really good, and I'm getting to a point where um, trading's going to probably be a bigger part of what I do professionally, and just kind of looking to make that move into this year.
Nice. Yeah. Definitely an interesting year, taking the bull by the horns when there was no bull around, for me on this side. Um, a weird year. Um, I didn't really hit the home run. Since I started trading regularly, I usually would get a big home run, that would pretty much equate to like a yearly salary, and it just didn't really
So
happen.
an example of that would be like Lucid
Yeah, that was it
for
last year.
you. Yeah,
Last year was
yeah,
Lucid.
yeah.
Last year Lucid
Right.
basically was a yearly salary for me, and this year just didn't happen. But my last big loss still was Clove, so I'm kind of in like this new range. And if those people that don't remember Clove wasn't even in this room. Clove was, I think, last December. Um, yeah, I'm pretty sure it was last December. But anyway, like I'm in this different range. Um, which kind of makes me go up and down, back and forth on what I'm doing all the time. But um, not being able to read flow, not being able to trade options, like it's just not my thing. Um, this room has kind of showed me almost like a safer way to trade, and I kind of um, like my whole style is safety. So like kind of believing in some other things as opposed to what I see has kind of been my whole year. Have I missed some setups? Sure. Have I missed some setups not believing? Sure. So finding that balance for me, like when to still trust TA 100%, um, and when to trust flow when the TA isn't there, has kind of been what I've been figuring out throughout the year. Um, but from I mean, we're here to make money. I mean, that's what it's about, right? I mean, let's not beat around the bush. From that side, it definitely wasn't as good as it's been. But I mean, the market wasn't as good as it's been the last 3 or 4 years, also. So um, I do like where I'm at. I like where this process is at because I think we get better every single trade. I'm a firm believer that what we do is very, very unique in general, and it's I don't know how else to say it, but it's kind of cutting edge. Just because of the work aspect that we put in. A lot of people out there, they just wake up, turn on their scans, their trade ideas, and trade momentum. And we are legit trying to be very early um, on major moves. And when we do refine that, I think there'll be some good ones. I'm hoping CS is that it right now. I know we're not supposed to drop tickers in here, but
Yeah.
but that's where I'm at right now. Is like trying to like just balance my whole entire trading career. Whether I'm because I really like the swing trade, um, but the day trading is very very profitable if you do your homework. So yeah, that's where I'm at pretty much on the
Yeah.
year. It was a journey, I'll tell you that.
It was, and one thing. I mean, I think everyone looks back at the year and says, "Well, this would have been a lot easier if I just had, just short tech every time,
Yeah,
just short Amazon and Apple and well, of course, like Facebook and Netflix and DocuSign and like just with options months and months out. Like, I mean, yeah, hindsight that would have been um, that would have been easy, but I think I did learn a lot finding really focusing on upside and stocks that can actually maintain some strength in this environment. And I think as we get into the new year, that's going to be especially important because what people see as an easy short, some of those are just not going to work as even as the market sells off. And I think it's going to really surprise some people because they're not going to be used to that. Some software stock having a green day when SPY is down 1.5%. Like what the hell is this? And that's just going to be, I think, the environment as the stock market tries to start to bottom out a bit. And no one can predict when that's going to happen, but yeah, I still think there is a lot of value to getting beyond trading momentum and trying to see the mechanics of what's really happening with some individual names.
yeah, yeah. No, I know it's one of our topics. Let's kind of roll into that. But like
Yeah,
a lot of the I said it last year, and I mean I didn't really pound the table hard on it, but I said like y'all better get ready to learn fundamentals of stocks because it's going to be important. And a lot of these ones that are falling off the table, they just don't have good fundamentals, so people aren't seeing value in them. Um, but there is some gems mixed in there. I mean, obviously we can talk about big names like Roblox and Netflix. Those things when they dumped, they came right
yeah,
back. They came right back instantly. But there's also, the mid caps and the pennies that it's the same thing where they just have very good value, and they get super super oversold. Um, whether it's because they need financing or they claim they're going to have to do Chapter 11, we're going to see a lot of Chapter 11 this year. But
yeah.
you have to get into that stuff, right? You're not just trading volume candles, which is what
Right, right.
a lot of traders want to do. You kind of have to get into the nuts and bolts. And what I've always and someone told me early on was like, you're not going to follow every news on every stock, so just find 4 or 5 that you like, and really hone in on how to follow the news on them. Because when you learn how to follow news, it'll make it easier to follow news on other stocks. So
Yeah, absolutely. And the way option flow operates around news is always interesting too. I mean, there are ones where oh, you can spot unusual flow on something. The news comes out, and then that flow kind of makes sense. There are others where whales are sort of guessing too. They know something's coming, they don't know quite when, and you see them just sort of testing the waters on that over and over again. And you can't actually trade around that because the spike in flow gets people interested now that more people are watching that in those stocks, and they'll see a little bit of movement, and it's not actually, the move that they anticipate, but it sort of activates the stock and kind of puts it in a range. So you don't have that's where you get the base hits. You don't have to hit the home runs. Yeah, the other thing too that I think is really crucial here is that there are these events that are going to pull pretty much everything down. Fed announcements and different numbers, jobs numbers, or inflation, or whatever. But going into those events, not necessarily just trying to just do a lotto on these big candles that happen, but knowing, okay, this stock's in a bullish setup, and if it gets pulled down here, it's like a rubber band, and it's gonna pull itself back up towards those strikes, where the whales are buying or where they're selling puts, or whatever. They protect their positions in those high volatility moments. Knowing which stocks to target is really crucial, and that's something we emphasize as well. And that's where the sectors come in too, because basic materials or industrials might just get wiped out for a few hours, but then they come back fairly quickly and might close the day flat. But if you're catching it on that big drop, yeah, that makes for an excellent trade, especially if it's around um, one of your levels. So again, it's all about identifying different kinds of strength within within this option flow for me.
Yeah, I've loved the sectors. That's been some again another new tool or something I'm kind of like trying to add to my game is because before I really wasn't worried about that kind of stuff. I kind of tried to stay blind to the company. Just tag it with all stocks are shit, right? That's definitely
Yeah,
one of my trademarks. It's just believe they're all crap and trade the chart. But learning those sectors has been an added tool to my chest. And then not it's not only learning the sectors, and I hope this gives everyone a little hope because I mean, if you're listening to me, you believe I'm a decent trader. I appreciate that. But I'm a year in with a professor, and I'm still sorting out which tickers are tradable for me. On which oil one works the best, which gold one works the best, which silver one works the best. Shoot, which uranium one even works the best. That's a tough one to
yeah,
figure out. So it takes a while, but the work is always worth it. And the parameters for these trades, like those ones, we're not trading those for anything else besides the world events, and I mean that is very very important. Um, the if you look at stocks like um, I think we were talking about it in like August or something, like the Bitcoin as a service stocks, not actually the
yeah,
miners, but like the as a service. Well, that whole sector kind of just gave up, and just knowing that kind of let you cut bait early. Like we're not chasing, like Ebon had a reverse split. We're not chasing that. We're not chasing Hut or Riot or Mara. I mean, I think Mara is like 350 right now, and you're not hearing us talk about that because they're just not tradable. There's no events. I mean, they don't fit the whole like how you make a cake theory, right? There's not the eggs, the flour, the
yeah,
milk.
yeah.
It's not all there. So
Well, and if you look too at how much I used to be on coin and how little I talk about it now. Like, so, I was on it very precise levels every single day. And now, it's in this range where it goes like 32 to 35. And that's just not enough because it's trending down, but it's not quite fully breaking down yet. But you can see it plain as day that it's going to go to $25 probably. But until that happens, you're just kind of just scraping by, and it's really easy to get um, in a bad position or just kind of a mediocre position on that. So yeah, I mean that um, caught the big move down with coin, and I'm just kind of like backed off. But it all came about because of our focus on sectors, and that whole time in crypto when it was good, we were trading different stuff on the same thesis, and that's what happens a lot, and that's where learning sectors and learning market caps is so crucial to what we do.
Yeah, I think, and that's a good example. I didn't think about it when I brought that one up. That's a good example of, let's say we did mediocre, um, in in the summer on the crypto. Whether you got a little bit of Mara or some of coin in those rallies. But man, when it turned, did we nail the shorts? I
Yeah,
mean, and the two that we have definite timestamps on played out perfectly. So I don't think that happens without the sector, noticing sectors in general,
yeah,
which I like. And we're probably talking about the worst one that we talk about in the group for sure. But uh, it just meets like
yeah.
what you were talking about, meeting the parameters for trading. Um, I wrote it. Where's that sticky note at? Hold on, let me find it. Yep, here it is. Sector, profitable, trend, level. I think I said that in October. That's what you want to trade,
Yeah,
and then
yep,
it's going to save your bacon until this market has until you get into a rally, right? And then you just throw money at things. Um,
right.
but in this current environment, like when we're debating whether we're having a Santa rally or a China rally, um, one more time for the people in the back: sector, profitable, trend, level. That's all you need.
Yep.
So, kind of moving on here. I'll let you choose whether you want to go to the computer or the oil fields here.
Um, yeah, let's go to computers
All
for
right.
a minute. So it's not to get into too well. One specific ticker you got to talk about with this is Apple, and it's just funny that everybody's doing the monthly chart comparison of Apple and Tesla. You know, when Tesla fell off.
Oh, really?
I
I missed
yeah,
the
yeah,
videos.
which to me is a little silly because there's just they're not comparable companies or stocks or anything. Uh, and but anyway, so everyone's all short Apple now, and they're really late at that because we were talking about this um, at least around like 150, 155. I recall us talking about how where's this 20% going to come from.
Yeah.
It might have even been like 170 when we first mentioned that, and so now it's down here 129. It's kind of like at our one line in the chart and that. So that's at a key level. I do think it can break down further, and 120 area probably. But what I want to mention though, in regard to that, is that there are so many of these stocks, and I mentioned them. Um, I used to really just be focused on cybersecurity because as a group, those were moving really well together for a while. But more broadly speaking, there's software as a service. The acronym is SaaS. And what I think is really going to benefit people is pay attention to how those are reacting lately as the market is weak. They will sometimes be flat. Sometimes they'll even make a really strong move to the upside in this environment. Twillo did that, move from like 42 to 49 over the span of a couple of days, and they when you zoom out, they just look really bad. Like the chart has just completely kind of given up. But just notice kind of how it's look at the day chart on Twillo, and I bring up a specific ticker for kind of a concept here that it's kind of flattened out. It's not wanting to give up on those recent lows, and very much the flow kind of bears this out. And this is a subsector. So if you're looking at sectors, technology is too big. If you're filtering on unusual whales and you just say technology is too big. So you have to have watch list on some specific stocks. And so I try to grab one in like an HR stock, like Workday. Um, Twillo is cloud-based, communication. Snow is kind of similar. You get into your cybersecurity like Net, DDoG, Crowd, and just have those as a group. MDB is another one, and just watch closely how they react to what happens here. Whether we have a rally, going to probably outpace the gains of a lot of their technology peers. And if we sell off heavy, you're not as likely to see those 7-8% drops that we used to. So when you see that environment, you kind of build your strategy around that. For me, fewer weeklies, looking at contracts 3-4 weeks out, because that's what the whales are buying, and kind of modeling trading off of them often is a good idea. As retail, we can't get into as many the multi-leg complexity or anything like that, but just sort of be watching for that in my notes, the strength of this sector within this environment is going to be a big theme over the next month or so, I think.
Yeah, a lot of those, just from the way I look at things, are really beat down. And then if you do, I was just looking at Twillo. If you do get into the fundamentals of them, they're probably in a better spot um, than most things. Like they're getting close to that book value I always talk about. Um, Twillo being a little bit under right now. I always I mean, I'll be 100% honest. I hate the sector. I can't stand it. But the range
Yeah,
I've seen, like Docu, I would never play Docu without you. But Docu, I've played a few times just because of the range is so good. Um, and the list you dropped yesterday, I think it was, and then
yeah,
the two I dropped, which I really don't even know if those two were software as a services, but I'm pretty sure they're tech. Um, um, those charts are all in great spots. Like they just have, like, 30% range feasibly, like
yeah,
with just relief. And I think that's what you see in a lot of, um, or that we've seen in a lot of other sectors. But that's just rotating to those because those are, I mean, they're just getting so beat down. Um, Reminds me kind of, and the I think we were the only ones in the world on it, but kind of reminds me of the cruise lines when they were just like
right.
stoop. I mean, they were like giving them away. Um, when you get 50% of book value and they're still like they still have customers coming through the doors, you just kind of wonder about it. Um, but
Yeah,
yeah,
those were green on some of the absolute, like the actual worst days of the year for SPY and QQQ. Like I recall that for sure.
yeah. So with these tech charts, like, I mean, there definitely is another leg down, but it just doesn't make sense from a financial perspective unless they really have bad news in a lot of cases. So the relief coming back to just 10% of what they lost, which might be 30% of the stock now, is, yeah, those are going to be gems. I see it now, and again, I hate the sector, but um,
Yeah, well, right, and they're just so hard. They're hard to short down here. I mean, that's another lesson I would think people should take from this is it's just you try to short snow at 140. Okay, you're going to get a drop to 137 for about 15 minutes, and then it's going to come back to 140. So it's hard to be in a position like that. Whereas it's like, okay, I see some upside here. Not quite sure when it's going to happen, but so if I go a few weeks out, I can, I'm not going to get stopped out. I can stay in this position longer. And then you look at what I do. What I do try to short. Um, I've been shorting end phase because that one had done so well, had been up over 320 all time highs, has a familiar pattern that we played before this drop to 240, 250. And I see that in the flow. It's like, okay, I'm going to play the downside here. But what I'm really looking for as I am doing that is that reversal back up, because that's actually going to be much bigger, probably to test all time highs again sometime in the first half of the year or whatever. But yeah, so anyway, so that's just one one sector, and I don't like those software stocks because I like oil and steel or cheeseburgers. Like I do like something that's tangible. that's just kind of my preference as
Yeah.
well. But there is a big opportunity in software, I think, right now.
No, I 100% agree. You brought up like three sectors there. Just the way you talk, you always talk from a sector standpoint.
Yeah.
um, so let's move on to the I guess the champion of 2022, um, which would be oil. Um, everything I've
Yeah.
seen is like that led the way in across the board. I mean, no matter what index you look at, if it was in there, it was leading the way.
I think 9 out of 10 of the biggest gains in the S&P um, were oil, and the only one that wasn't was, I think, First Solar was up there.
Yeah,
And yeah, so just Oxy obviously is the one that comes to mind. Still, showing some strength in a pretty decent week last week. If you look at where like oil's sitting right at $80, that we talked about a range on this. I'm not sure what our exact numbers were last week, but like 88.90 is possible. I think I don't see a move like to 100, 110, or crazy numbers like 150 that people talked about. But the thing is, the stocks themselves have kind of made, for lack of a better term, made a home up here, so that you're not going to see them, as oil gets in this range from 70 to 90. You're not going to see them just give it all up and check back down to those previous levels. So you want to just kind of look for um, some some strength at these different spots. Like if Devon, um, were to fall to like $50 or something like that, it has ranged back to 75. So that very much is possible. Exxon, up here at 110, closing at 110 was significant on the option side of things, and you do see some flow up to like 114, 116. That in and of itself is not a great range, but then what we do is we check down to some of the mid caps and some of the oil service stocks and things like that. And you go to something like rig, where there's a very legitimate possibility of rig claiming five and keeping it and making a move to $7. I could see that in the longer term flow. Something like SD is another one that is has pulled back a bit. You know, could fall to like that $16 level, but has that range back to 22. If things really get going, 24, 26, 28. So this, it was the year of energy, and just because it's a different number on the calendar, I don't think that's really changed. I think we could see um, retest of some of the highs, and possibly a breakout beyond that, depending on what happens here.
yeah, I like the charts. I definitely follow the price of oil, something daily, natural gas and gold. God, why couldn't I get that out? Gold, natural gas, and oil are the three, and that's totally because of you. Um, wouldn't have done it before. I trade off of the gold and natural gas. I don't really trade off the price of oil, but I just kind of always have felt like I was late to the party. Um, on those, I just ran through those tickers, even though we're not supposed to mention tickers in this part. Um, Happy New Year, everybody! But if you just look at our levels where we were on most of these, God, you were so early on so many of these, and the range is just amazing. For me, you got to step. And I think I talked about this last week a little bit. Like, they all kind of rise with the news. Like that's going to happen. Like every ticker that was oil at one point in time, let's say March, April, May, um, they were just going. It didn't matter if you had oil in your, anywhere in your thing, you were running. Um, you separate the men from the boys at this point in time. Like the good companies,
Yeah.
they are going to leg up. The bad companies are probably going to slowly check down in a range, um, because they got too overvalued. Um, so yeah, I'm looking forward to that. But I think this is when the real work's done, on these, especially if the price of oil stays up, because the good ones will really stand out, in my opinion. Um, you kind of mentioned all the good ones, so.
Yeah.
And rig's not an oil stock; it's a robot stock.
Right. Right.
Damn
Yeah.
it. um,
Yeah,
as
and this again too something to look for in my notes. I'm going to try to actually bring a little bit of clarity to what it means. But when I talk about like midstream oil looks good,
oh yeah, yeah,
that kind of jargon,
yeah,
kind of like um, is useful only if you know why that's significant or what they are, what what it is. So, so it's kind of like that distinction we made between crypto service and crypto miners. There's so many different segments of oil, and you just see
yeah.
whales sweeping through them one by one, and that's something I've been able to catch. So, so that'll be a big part of notes for us going forward
Well,
too.
and I not to get too. I mean, we're already a little extended here, but not to get too far down the rabbit hole on that. But you're already like seeing that. I mean, if you're just totally ignorant to that, um, with the tankers, right? Like the people that ship oil,
Yeah,
they've been the ones to profit off the jump. And like I was saying, we're going to separate the men from the boys. You're going to see that in that. Like, is it the ones that are getting it out of the ground, the ones that are shipping it, the ones that are refining it, or the ones that are selling it? Who's taking home the money? You're going to see that in the long run, and I'm totally with you on that. It's a good thing to
yeah,
learn. It's a
absolutely,
good thing to learn the
and so
process.
even as oil would pull back, um, they just did not give up their uptrend. Like STNG, just
Yeah, yeah. The shippers.
it
Oh yeah,
it'll yeah it'll drop like 0.5% when oil futures are down 4%
yeah.
or something crazy like that. So yeah, absolutely, we'll be on those too.
Yeah, so if we talk about like exploration, that's where rigs really going to come in, right? People would hop on those guys, or
Yeah,
Exxon and stuff like that. 'Cause yeah, no, I'm with you on that, and I think that's what separate. I hate to say it, beat the table on that, but I think that's really what separates us from most people is we're not just getting up and catching momentum. We're really looking at it from every single angle and just trying to put the pieces together, um, and be there
yeah.
early.
I mean, because that's I think uh, where an edge comes from. It's not
Yeah.
um, just
Clicking.
changing your process or just reacting every time to something that already happened, but having preparation, and that working hard at it, but working hard in the right areas at the right times. Like we're not just obsessing over short interest and synthetic shares and all that kind of stuff. Um, where eventually like that stuff kind of to me explains away a big drop in AMC or something like that. Whereas if you're looking at sort of geopolitical conditions, commodities pricing, like all these things that fundamentals that are going to move stocks, but might not move them right away. But being prepared for that to happen when you start to see a big jolt in options or a spot on the chart or whatever. So, so yeah, I'm all about that.
I mean, I really thought that you just had to click buttons fast and be really good at social media. No.
Yeah, yeah,
um, little over here, but we got to do the big dog this week.
yeah.
You had 385, 370. I had 371, 391. You nailed the upside. That's about. I think we were 384 on SPY last week. So I think you nailed the upside. We didn't get the bottom that neither of us had. I Bob Barkered you'd buy $1 down there, so we won't even count that. But yeah, what do you got? What do you got going into this week? I'm gonna make you go first. You've been killing
Well,
it.
last week it's kind of funny. We talked about the JPM collar, and then all of a sudden everybody was all over that. You just couldn't open Twitter without people talking about that.
Yeah.
So that definitely had a big influence on on things, and it really is one of the big explanations for why we didn't get um, the downside. That it was better for their position for that 380 or 3800 in SPX to to hold. They rolled it out to March. Gonna be important, but I think we'll get into that later. As we see how that position takes shape. But for now, that's gone, and so I do think that we potentially could see things break down a bit. I'm not sure it's going to happen right away. I don't actually think we'll check down as quite as far, but so like 375 is kind of my area of interest to the downside. And then as far as the upside goes, we closed into a nice little rally. We're going to see how much of that wants to carry over. So 390 is probably uh, my top for this week if we get going. But I actually, honestly, I don't know that we'll see both of my numbers. If that makes sense.
Yes.
Like if we check down to my lower level, 390 is kind of a stretch. But if we start off the week pretty well, I think we get to 390, and then I don't. Then if we fall back down, probably 380 would hold again. So kind of a tighter range this week is sort of what I'm expecting.
Nice, nice. I'm gonna use the short week to my thesis, and hopefully it works to my advantage. But I'm gonna go with this, and I'm using the weekly candles only. But I'm gonna go with this 384 as the high. 84, and I just really think we got it. I'm gonna go on the downside. I'm gonna go 72. I really
Yeah.
think we got to test that 370 level though. It's just it it just needs to get it over with. After that, we have the 200 moving average on the weekly, which is where's that at? Like 360. But I think we're gonna get a flush. Not the crescendo that we had first quarter last year, nothing like that. But I think we are gonna get a flush here. Um, Short week makes sense. Probably gonna be there. Um, I just don't
Yeah,
I don't
absolutely.
see
And,
I don't see
and
the upside P because I think retail numbers are going to come out for Christmas and they're not going to look good. Um,
yeah,
and that's not going to help. You're not going to. It's like that's a short term number, but you're not going to see relief in anything from that, right? Like bad Christmas numbers aren't going to drop inflation 1% in the next report. That's not going to happen. So I just think we're kind of in that spot right now.
yeah, yeah, I think I'm with you, and I think that my high end number, wick. You know what I mean? Like,
Yeah, yeah.
I think if it gets up there, it's going to get rejected pretty hard. I want to talk about this weekly chart just for a minute before we wrap up.
Spy.
So, like on the SPY weekly chart, yeah,
Okay.
if you were to draw a diagonal line down, and I'm just bringing this up because I actually don't draw diagonal lines on charts that much. Um, I just kind of do levels, but I study them and I watch them and I look at what you do and Goose does. Um, so this, what like, is there a weekly close or something that you think would kind of break out of this downtrend? Or well, I'll phrase it differently. On a weekly chart, reversal look like to you out of a downtrend?
So I'm assuming you're drawing your line from the start of on the top side from the start of 2021. That's what you're
Yes.
doing, right? Yeah, yeah, yeah.
Yeah.
So I don't personally, I don't trust trend lines on anything that's not short term. So
Gotcha.
I would draw my trend line from where it bounced off the 200.
Mhm.
Um, which you really can't put a trend. If you're going to put a top end trend line, then you go from where it had the last two highs. So what you got the 430
Gotcha.
spot and then the 410 spot, and I would put one there. Um, and if you did put one there, it's holding that trend pretty damn strong. I always I'm kind of weird on that trend line thing. I like them shorter term, and I like to always put them on the bottom because I'm an upside player, right? Like
Right, right.
I don't. I'll just use a horizontal level, not a trend line for a top end. You just pick a spot. Like for me, I mean, I don't care where you put here. I'm gonna throw a trend line up. I don't know if you're looking at screen, but just so people know what I'm talking
Yeah,
about.
yeah,
So if you put this here, and if you're not cheating, you got to go off of this one.
yeah.
Right there, we'll just rough it. Bam. So for me, to gain this trend line right now, you're at 403. You wouldn't you
Right.
start playing spy to the positive side at like 390, 395? Wouldn't it?
Yeah, exactly. And this is my against calling one out. Like the one of the big charting subscription things where they always do this, and they'll catch this full move through the wedge, and then they're like breaking out of the wedge, like that's the entry for the upside, and we were talking upside on it like 20 points ago or something. So yeah, I'm completely with you
I
about
have
that. Like playing up to the test rather than playing something that passed the test is to me a higher percentage. So
I have a thinker, and I don't have it on right now, or I would just throw it up. But I'll screen cap it. But it's basically the last 5 trend lines, and it auto generates them for you. Like it puts
oh
them on the
cool,
chart.
yeah,
So I'll put the weekly up, and the trend line that I assume that you were looking at, right, will not be one of the last 5 trend lines. And that's the main point I want to make is like the trend line they're using, the anchor points they're using, they're way too old. I mean,
yeah,
especially on a weekly. It's that's more of a short term thing, and that they use them for like there's no 3 year trend line. That's a moving average.
right,
I mean, that's just how I see it. I don't know. I don't know. I could be wrong. There could be people that use them effectively, but for me, you're missing the majority of the move, especially.
Yeah, exactly, and that really gets to my point there that like if you're waiting for calls on SPY till 403, I mean, what are you even doing? Like,
Yeah.
so yeah, and this on a different this happens with a lot of stocks, Apple or whoever. Most recently, Apple to the downside, where it was like, okay, I'm going to short Apple now. It's at 129. It was at 155. Why weren't you shorting it up there? So, yeah, with you on that.
Yeah, I don't. It's some weird variation of breakout trading, but the guy's already out of jail.
yeah.
That's what it is. All right, we're 45 in. Happy New Year, everybody. Let's kill this and get to work. Unless you want to put anything else in here.